right, thank you everyone for joining us today. My name is Alexandra. I am one of the DSOs here at ISSS, and I wanted to thank Sabrina and Jimmy for hosting this information session. We are going to have the chat open, but you will be muted until the end of the presentation, and then you'll be able to ask questions. So Ginny, whenever you're ready.
Excellent. Thank you. And again, afternoon to everyone, and sorry for the little delay. So today we're going to be talking about understanding credit. And this is very important because as we all know, everything runs on credit. Everything from being able to make a big purchase, anything from renting a car, renting a home, buying a home, even setting up a cell phone service. So everything runs on credit. So it's important that we understand how to use it, how to protect it, and how we can take care of it and make it grow. So along the way, if you have any questions, maybe you can write them down on the message board, and then once we're done, we can definitely answer any questions. Or if you want to raise your hands throughout the presentation, that can be helpful too as well. So what do you guys know about credit at this point before we go into the information? When we talk about credit, what comes to mind for you guys? If anyone has any idea or
I
wants to
think credit is a kind of a temporary loan, you can say, that you can take from the banks. That if you want to buy something, you don't have to put your money upfront. Instead of that, you can take a credit from a bank and then you can purchase something that you want. Either
Excellent.
it can be business or your personal expenses.
Yeah. So that's a pretty good definition about what credit is. And we're going to see that there's different type of loans as well. And we're going to go into a little bit of details in the slides that we're going to review moving forward. Okay. So when we talk about what is credit, like we just mentioned, credit is borrowed money from a lender or bank that you can use then to purchase goods and services when you need them. Now, credit scores are the decision-making tool that all these lenders or banks use to decide how likely you are to repay that loan back. Okay, so a lot of times when if maybe someone has had that situation where you apply for a credit card, it gets denied, and one of the reasons is that your credit score doesn't meet the standards or what they're looking for. Okay, if you have a low credit score, then what that pretty much means is that it's very risky to lend you money, and banks would think twice before they do that. And then if they do lend you money, then they do it at a high interest rate. Okay, so credit scores are not only used to determine if you're gonna get a credit card or a loan, but also what type of interest rate you'll be working with. And pretty much interest is the cost of using someone else's money. Okay, so you borrow money from the bank, you're gonna have to pay it back with interest. Okay, when you borrow money, you always pay some sort of interest or fee. Okay. Now, how can we build our credit? Because that's what we all want, okay? If we don't have credit or we have bad credit, how can we build it? Well, one of the ways that we always recommend to build the credit is using a secured credit card. Okay? Secured credit cards, pretty much the way they work is you put in your money. Let's say at a bank, you send them $400, and they'll send you back a credit card for $400 or maybe a little bit less. You use that credit card and you pay them monthly, you have an interest, etc. But the bank doesn't take any risks because if you stop paying, what do? They have your money frozen, right? To back up that credit card that they provided to you. Okay. Now, why does that help you? Well, these banks, what they do, they report this credit card as a regular credit card to the credit report agencies. So it seems or helps you build that credit history. So it is a good way to start with building credit. I personally used it myself too when I started building my credit. A lot of banks, after you have that secured credit card for about 6 months or up to a year, they'll turn it from a secured credit card to a normal credit card, and they'll send you back that money that they had aside they had set aside for you. Okay, so it is a good way to start with building your credit. Another idea or something that might help you is become an authorized user on someone else's account. Obviously, this person has to trust you, and you have to be disciplined, and you have to understand that if you use that credit on that account, try to pay it back. Make sure that you pay back what you use, and you don't put that other person in harm's way by messing up their credit score. Okay, so maybe a parent, a relative, or a close friend, they put you on their account as an authorized user. That built your credit with time as well. Another thing that can help you is getting a cosigner. This is used a lot, especially with auto loans. Sometimes you try to buy a car, you don't have the perfect or ideal credit. So they tell you, do you have someone that can cosign for you? So they'll go ahead and cosign. Maybe a family friend can do that. With a higher credit, you get a better interest rate, but you're still paying that car. So your credit starts building as well. And some of the easiest credit cards to apply for are the store or gas station credit cards, like a Macy's card, J.C. Penney, or when you go to the gas stations too, the big gas stations, they have their own credit cards. Those usually are a little bit easier to get approved for, even if you don't have the best credit. So that is another way to start building your credit. Okay. Now we talked a little bit about this, the type of loans, okay? Not all loans are the same. And it's important that you understand the type of loan that you're signing up for so that you can be better equipped to repay it and understand how much it's really going to cost you. Okay, we have what we call installment loans. These loans are repaid in equal payments over a set period of time. A perfect example would be like a car loan, okay? You go ahead and you get a car, you set it up for 5 years, and you know that your payment is going to be $450 for 5 years every month. Okay, that's what we call an installment loan. You know how many payments you're going to need and the amount, and that's not going to change. Okay, also a mortgage can be an installment loan as well. Now we also have what we call revolving loans. Okay, and these are loans that you pay back depending on how much you borrow. Okay, and the best example of this is like a line of credit. Okay, you might open a line of credit at a bank, let's say for $10,000. That's your limit. But right now, all you need is 3,000 because you're gonna remodel your bathroom at home. So you're gonna take out that 3,000, even though the credit limit is 10,000, you only pay back what you're using. So that 3,000 that you take out, the system automatically starts a payment plan, right? And you start paying it back every month. Now, if in 3 months you take out another $1,000, then that gets added to the loan balance. So then your payment is going to change. So that's why those are what we call revolving loans, because the payment is based on what you borrow, and that can change. Unlike an installment loan, which is a one-time loan, and you know what you're going to pay every month and for how long. Okay. Now, one of the most important things that we want you to understand is the cost of borrowing. A lot of us get in trouble with credit because we don't really understand this aspect of it. Okay. Generally, you're gonna repay more money than what you borrow. That's almost always the case. Okay. So just keep that in mind. The amount you repay is always gonna be greater than the amount you borrowed. Okay. Why is that? Basically because of interest, okay? The amount of money that a financial institution charges you for allowing or borrowing their money is what we call interest. So you might have gotten a $4,000 loan, but you ended up paying 4,900. Okay, that's why the interest charges were $900. It could be more than that, obviously, but just to give an example. Also, fees. Some loans are charged fees because of some activities like reviewing the loan application, late payment fees, things of that nature. So in essence, the rule of thumb is understand that you're always going to pay more than what you actually borrowed. Now, the key is to try to find the best interest rate so you don't end up paying much more than what you borrowed. All right, so what determines a credit score? So this is very important. The credit score is we want to know, remember that the higher the number, the better credit history, okay? And basically a credit score is used to predict how likely you are to repay your credit obligations on time and as agreed. Two significant factors that we want to share with you is that affect your credit score is whether you pay your debt on time and on the amount agreed, and your credit utilization rate. Okay, how much of that credit you're using. Okay, we don't want to be using 190, 80% of our credit, because what that shows is that we're kind of living off that credit. So we want to be careful with that. Okay, and let's look at some other factors in regards to our credit score. If you look here at the pie graph, one of the biggest factors is payment history, 35%. Okay, so if you have good payment history, you're gonna have a better credit score. Okay, so that's very important. Another aspect is outstanding debt. So the more debt you have, the lower credit score you're gonna have. So remember that. We don't want to use or max out our credit cards or our loans, because that shows that we're depending on that for regular everyday expenses. Okay. Also, credit, the history of your credit is 15% of it. The type of credit that you use is 10%, and the inquiries 10% as well. Sometimes we get into like this back to back of applying for credit cards and loans. That's not good. Keep in mind that every time you do a hard inquiry for a loan or a credit card, your credit score will go down just for doing that. So we don't want to apply time after time back to back for loans. Okay, we want to be careful with that. Let me see if there's any. I'm trying to access the chat, but my system doesn't allow me to. Let me see. Okay. Let's see if you guys, is it better to have more than one credit card from different banks or less and more? So the rule of thumb, like we said, we don't want to have credit cards just to have credit cards, okay? It's not a bad idea to have a credit card, more than one credit card from a bank. Remember, it's all about how comfortable you feel. If you have a bank that you know how they work, you like their customer service, their member service, you like how their app and the features they use work, then by all means, you can have multiple credit cards, okay? But just remember, we don't want to have outstanding debt. You don't want to max out all your credit cards, okay? Now I have another question. If you need a credit card to start building credit, but you need a good credit history to get a credit card. Okay, so when we're talking about building credit, that's someone that you have no history, and those are the things that we mentioned. The secured credit cards, that's the number one factor that's going to help you build your credit. Okay, now you're going to have to use your own money, but you can put $300 in a secured credit card. You start using it, you repay it, and then you're going to see how you're going to start getting these credit card offers right off the bat after maybe a few months. Now you want to be careful with that, because those credit card offers might not be the best for you. Okay, always keep in mind the first people that are going to come after you is those credit cards that have the higher interest rate. Okay, so you want to be smart with that as well. Do you need a social security to have a credit score? 100%. I'm not too sure, but I would say that yes, you do, because when you go into your credit, if you want to pull up your credit report, you are going to need a social security, and that's pretty much how they base it on. That's how they get all the information together based on your social security. So I'm pretty sure that you do need a social security number to have a credit score. Okay. All right, so let's continue here. So we already reviewed the factors of what affects your credit score, okay? And as you see there on the pie chart, your payment history is such a big piece of what affects your credit score. So you want to make sure you pay on time and you pay more than that minimum payment, okay? Minimum amount. All right. Now, credit scores, the government has established certain rules so that credit cards, all these banks don't use these things in regards to credit scores, okay? So when we're talking about credit score, they don't consider any of the things that you see here on this chart. They don't consider your age, your race, your color, your religion, your national origin, your gender, marital status, salary, occupation, employer, employment history, or where you live. So none of these factor in to your credit score. It's actually illegal for them to say, oh, since Jimmy is 32 years old, we're gonna lower his credit score, or because he's divorced or married, we're gonna increase his credit score. So all these factors it would be illegal for the credit bureaus to use to determine your credit score. It's a way of protecting the customer, okay? Now, when we talk about credit scores, as you see here in the chart, these are kind of like the ranges, right? What we call exceptional credit will be 850 to 800. A very good credit score will be 741 to 799. A good will be 670 to 739. Fair will be 580 to 669, and poor will be 300 to 579. Okay. Now, just in the same way that you can mess up your credit score with some bad payments and late payments and things like that, you can also improve your credit score with constant payment on time, paying more than the minimum. You'd be surprised. And I've worked with individuals and family members that have had bad credit. I've seen poor credit jump to fair credit in less than a year. Paying on time, being on top of your stuff, it does improve. So no matter where you are right now, there's always room to grow, and you can do it if you put your mind to it, you're disciplined, and you do things the right way. You can go ahead and improve your credit. Now, we're going to review some of the things or the mistakes that we can make that's going to kind of keep us in that bad credit range, okay? Not understanding how much you can afford, okay? Sometimes, and it's happened to all of us, we go to the store, we see something we like, and we fall in love when we don't think, man, can I really repay this back? This $600-700 item, can I pay back monthly plus the interest? Not having a budget, because those things are connected. We buy something and then I'll figure out how to pay it back next month. Okay, when the bill is due. But if we have a budget, we can determine how much we can spend. We can say, you know what, I need to hold off on this purchase because I don't have an extra $50-75 to pay every month to this credit card. So budgeting is very important. Failing to protect yourself from fraud. Okay, if you don't protect your credit, then you're gonna mess up your credit. Okay, and it's gonna be really hard to get out of that. So we want to always be on top of our credit. Check our credit report for any accounts that we don't recognize, that we did not open, and right away we want to be on top of that. Okay, applying for multiple credit cards in a short amount of time, like I mentioned before, this is a very common mistake. Even when I was younger, I fell into the mistake because I was getting approved everywhere. So I was just getting these credit card applications pre-approval, and I was like, yes, yes, yes. Well, that does affect you over time, because like I said, every time reapplying, it does bring your score down every time. Using more than 30% of your credit card limit is also a big mistake. It is going to affect your credit score. We want to keep it at 30% and below, okay? The amount of credit that you're using. Letting friends and family use your credit score for their financial gain. Be careful, okay? I know that we want to help our friends and family, but understand that when you let someone your credit, you're still responsible. Even if it's their car and they're going to pay it, if they stop paying, you're responsible for that. And we've seen it time after time. Customers and members that come back and say, but that's not my car. But they let them borrow their credit. Okay. So if you do decide to do it, make sure you're doing it for someone that's extremely responsible and that you feel confident that's gonna pay that loan back. Because if not, either you're gonna pay it or it's gonna affect your credit score. Late payments, these are the worst. Don't pay late, pay on time, okay? So make sure, put calendar reminders, do auto pay if you can. Make sure you pay on time. Letting loans and credit cards payments go delinquent, okay? This means that you haven't made payments for over a few months. When we do that, that is gonna affect your credit score in a negative fashion, okay? Now, let's do a credit card true or false and see if you guys can help me out with these. Paying the minimum payment on a credit card has a positive effect on your credit. What do you guys think? Paying the minimum, does that have a positive effect on your credit? Is that true or false? You guys can open your mic if anyone want to take a try at this question. Let's see the answer. False, okay? You do not want to pay the minimum payment, okay? And when you get your credit card statement or loans, check it out. They usually have a graph that says if you pay the minimum, how long it's going to take you to pay off that balance. You're going to see that sometimes it's like years. But if you pay $20 or more, you cut that in half or more. So always pay more than that minimum payment. The credit card companies want you to pay that minimum because when you pay that minimum, you're barely just paying the interest every month. So you're never going to get out of that debt. Minimum payments on the majority of credit cards is 3% of the balance. Okay, that's usually how they calculate it. So, and like I said, you hardly ever end up paying that balance just by doing the minimum. You always want to do more. Okay, being over 50% of your credit limit on a credit card may affect your credit score. That is true, okay? If you're using 50% of your credit limit on your credit cards, that is going to hurt your credit score. The magic number is 30%. You want to use 30% of your credit in order to improve your credit or keep it in good standing, okay? When it comes to your credit score, your age and gender is a factor. This would be false, okay? Like we mentioned, gender and age are one of the factors that cannot be used when determining your credit score. 35% of your credit score is based on your payment history. Remember the graph we saw? And in this case, it would be true, okay? 35%. So that's how we know how important your payment history is when it comes to determining your credit score. An example of a revolving credit loan is a credit card. Okay, remember, there's two type of loans, okay? We talked about installment loans and revolving loan. In this case, a credit card is considered a revolving loan. So it's true because you only pay back on a credit card what you used, okay? Your credit limit could be 5,000, but if you only used 1,000, that's what you're going to pay back. All right, so I want to thank you guys for giving me this time to talk about credit with you. If we have any questions, we want to take the time to answer your questions and see how we can help. Let me remove the share. Okay. Let me see if you have anything else in the chat. So if we need a social, how can we start building our credit score? I'm an international student, so I don't have a social security. Well, in your case, being an international student, we would have to do some research to see how you can build your credit score, because it is important. So, there are a lot of resources online. I would recommend going to the credit bureaus. They probably do have some way or some answer in regards to international students, okay? Anyone else have any questions?
I had one question.
Yeah.
Like for example, right now you took some healthcare options, and then you're not able to pay that back. Like for example, you took some CT scan or brain surgery or something like that, and then after that, your health insurance covered some amount, like some percentage of the payment, but the rest of the payment you're not able to make it. So will that affect your credit score?
It is gonna show, but it's not gonna affect any type of like medical. It does not affect your credit score.
Okay. Thank you so
No,
much.
medical bills do not. Any other questions you might have about credit history, credit score, banking in general? This is the time. Okay, I don't think there was anything else in the chat. Let me double check. Okay, so in the chat there is a question. I have a promotional free APR till June, and I have some outstanding balance to be cleared. Can you suggest some refinancing options? Yeah, I always tell people your best option, especially when it comes to anything related to banking, it's do your research, because there are a lot of opportunities. So in your case, if you have that free APR finalizing in June, if you do have the credit, maybe you can apply for another credit card with a 0% interest for a balance transfer, right? And you can transfer that balance to the new card and then continue to pay it interest free. That's what most people do in your scenario. But obviously, that implies two things. First, that you have a good credit that you can now get another card. And my recommendation is when you transfer that balance, don't use that balance again on that other card. You know what I mean? So remember, we want to keep our credit usage to below 35%. Okay. But that would be the best thing in your case. Just look for a credit card that has 0% balance transfer fee. And there's a lot of them. So always just go online and look for the best options for you. Okay. Is it useful to have good income out history using a debit card to apply for a credit card? Really, like your income does help you when applying for a credit card. The usage of a debit card, I have never heard of that helping you really when it comes to applying for a credit card. The only thing that might help you in this scenario is, for example, let's say you have a checking account and a savings with a bank, and now that bank offers you a credit card, or you want to apply for a credit card with that bank. That bank might take into consideration the type of usage that you give to your debit card and your income, of course. Income is always going to be considered. Um, but really, at the end of the day, the usage that you give to a debit card doesn't help you with your credit history. You're gonna get more help with a secured card. That is something that from personal experience, you are gonna see the change within months to your credit score once you get that secured credit card, especially if you have no history or very bad history. Let's see, give it a couple seconds, see if you guys have any other questions. And another thing that we do want to add is take care of your credit. There's a lot of fraud, a lot of schemes going on, and a lot of them do revolve around credit cards. So we're seeing a lot of people falling into these traps, these schemes, and losing a lot of money. So you want to protect your credit card, keep your credit card with you at all time, the physical credit card. Don't share it with anyone. Don't send photos of your